Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that might be facing a bit of turbulence. Think of it as a plane trying to stay in the air with one engine sputtering, but we're here to decode if it's just a rough patch or something more serious. Alright, in this video we're dissecting BioAtla's latest 8K filing. This isn't their usual quarterly update, but rather an urgent notification because they've been warned about potentially being kicked off the Nasdaq stock exchange. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this and many other SEC filings. So what's the problem? BioAtla, a company in the biotechnology industry, received a notice from Nasdaq stating that they no longer meet the minimum stockholders' equity requirement. It's like receiving a warning from your landlord that your rent is overdue and you might get evicted. The company's stockholders' equity, which is basically the net worth of the company, was only $540.25. Now that might sound like a lot, but to stay listed on the Nasdaq global market, they need to maintain at least $10 million in stockholders' equity. They came up short. This requirement falls under Nasdaq listing rule 540-515 Rule 500-445 and the 1A, also known as the minimum stockholder equity requirement. Essentially, it ensures that companies listed on Nasdaq have enough financial backing to operate and aren't at immediate risk of going bust. It's like having a safety net to prevent a fall. The company also failed to meet alternative compliance standards related to the market value of their listed securities or their total assets and revenue. Failing all three standards shows that the company is facing difficulties in various areas. Now, this notice doesn't mean BioAtla is immediately getting kicked off Nasdaq. It's more like a warning shot. They have some time to fix things. It's like getting a grace period to pay your overdue bills. Specifically, BioAtla has until late June of 2025 to submit a plan to regain compliance, meaning show Nasdaq how they intend to get their net worth back up to at least $10 million. This plan is known as the compliance plan. It's like a roadmap showing how they will get back on track. If Nasdaq accepts their plan, they might get an extension of about 6 months from the date of the notice to execute it. However, if Nasdaq doesn't like the plan, BioAtla can appeal. It's like having a chance to defend your case in court. BioAtla says they plan to submit a compliance plan by the deadline and will take all reasonable steps to meet Nasdaq's requirements. It shows that they are actively trying to fix the problem. However, they also admit that there's no guarantee Nasdaq will approve their plan or that they'll be able to meet all the requirements. It's basically a disclaimer that things might not go as planned. The report includes a section on forward-looking statements, which basically means the company is making predictions about the future. But they cover their bases by reminding everyone that these predictions are not guarantees. The company refers to the Private Securities Litigation Reform Act of 1995 to protect themselves from being sued if these predictions don't come true. The company lists a number of risks that could prevent them from succeeding, including potential delays in clinical and preclinical trials. Since they are a biotech company, clinical trials are a crucial part of their business. Delays can mean lost revenue and increased costs. They also mention their ability to form collaborations and partnerships with third parties. Biotech companies often rely on partnerships to fund research and development. If they can't find partners, they might struggle to stay afloat. For more information on potential risks, the company points readers to their quarterly report on Form 10Q. This report contains a more detailed description of the risks facing the company. So let's zoom out and assess BioAtla's overall situation. The warning from Nasdaq is a serious issue. Failing to meet the minimum stockholders' equity requirement can be a sign of deeper financial troubles. It suggests the company may be spending more money than it's bringing in, or that its assets have lost value. The company's plan to submit a compliance plan is a step in the right direction, but it's not a guaranteed fix. Nasdaq needs to be convinced that BioAtla can turn things around. The risks highlighted by the company, particularly those related to clinical trials and partnerships, are significant. Delays in clinical trials can impact the company's pipeline of new drugs, and failure to secure partnerships can limit their access to funding. BioAtla is facing a challenging period. Whether they can successfully regain compliance with Nasdaq's requirements remains to be seen. Alright, that's our breakdown of BioAtla's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.